Hello traders, and welcome to another weekly Forex Market Forecast. In this weekly market forecast, we will talk about the next week and month ahead in the market. Of course, we are expecting, as we have said from the title, big moves in April. If you are a member, you already know what we can see happening, which creates a lot of opportunities for good moves to trade in the market. And we also talk about what was happening in the previous week and how we protected our members. It was more of a type of a capital protection week rather than looking for something big to take place. So first of all, starting with the dollar index as we usually do. Right here, we have been expecting the previous week to give us signs of weakness. The market initially pushed up, then it pushed down as was expected, and then the market reacted in a strong way to the upside again, right? So that was, let's say, the volatility of the week. FOMC and then reacted higher after that. At the moment, we can still see the dollar index trading within 13th of February 2024 cycle. We can expect in the beginning of the week to give us a type of a pullback. Then it can still push up one more time. It doesn't have to break the highs. It can do that though. So we are not going to be betting on that, of course. And then from there, entering the next week, the dollar index should start giving us a drop to the downside. Of course, how low this drop can go. If you are a member, you will be able to see what we can see in the month ahead. If you are interested, you can join us as well in the link in the description. Of course, if you are on the premium plan, you benefit from 4 live sessions a week, Monday to Thursday, which we really update you and we explain the market in full detail like nobody else. So that's what we can see in the dollar index getting into the new week and the new month ahead. For the dollar yen, we have got this push up in the last week or so, mainly due to BOJ's meeting that has re-established the weakness in the yen, like we have seen over the last 2 years, I would say. Nothing unexpected in this case. Of course, at the moment, the way the market moves is still bullish, of course, in the bigger picture. However, we need to understand that entering the new month of April, the dollar yen should give us at least a pullback. The way the market has closed, it's likely that if we get a small pullback or not, it doesn't really matter. The market can still push up in this case, okay, towards 152,500, possible to 153, somewhere here, maximum. It can be a slow move. We are not interested in the upside in this case. And then eventually, within the new month, we should see a drop in the dollar yen. Minimum as a pullback. So the market should be sideways to lower from now into the new month of April. Of course, if you are watching this free YouTube weekly forecast we publish, you should not blindly trade. This is just a general bias and dynamic of the market. If you are looking to become a high quality trader and you want to optimize your capital and make better trading decisions, you can consider becoming a member with the link in the description. The most value it's on the premium plan we offer, because you're gonna have 4 live sessions a week. If you cannot attend all of 4 of them, you still get the recorded session. We cover everything in detail, and we also publish trade recommendations every month based on what is the best, in our view, entries and targets and trades, so you can learn how to trade properly. Other than that, you should take these recommendations we provide free on YouTube as a general dynamic, okay? So if you don't know how to trade properly, you shouldn't blindly buy and sell based on these videos. This is just a disclaimer. So for the dollar yen, overall in the month of April, we're expecting the market to turn as a pullback at least. So we are not going to be looking for any buy setups in this case. For the euro dollar, what we can see in the coming week, it's a bounce, another push lower. Okay. it will be within the same range more or less, and then the next move should be to the upside in the euro dollar. So overall, we are not biased to the downside, so we are not going to be looking for any sell setups at all in this pair. Last week the market moved down, it pushed up sharp and then it reversed. Overall is still within a corrective structure from the 8th of March right here in a deeper pullback, and it is expected to bounce another push lower before it bounces to the upside again. For the pound dollar, we got last week from here a push lower, then a push up. As we have been saying, we were not biased to the downside. We got the sharp push up, and then the market pushed down strongly again. Now, what is happening right here is a complex type of pullback. We can expect in the next week a bounce, another push up, and then we should see another bounce in this pair. So overall, we are not biased to the downside. We are biased to the upside in this pair. However, before it starts to move up, we can see another drop after this bounce in the beginning of the week. So overall, you should not be looking for any sell setups in this pair. It should remain choppy in the next week until we get to the new month, where possibly it can give us at least a bounce again. The pound yen, we have got this push up in the last week like the dollar yen due to the BOJ's meeting. The way the market has moved right now, it tells us that the market should bounce again. Okay, maybe retest these highs and then it should pull back again. So it's going to remain kind of in a sideways type of fashion over the next, let's say, 1-2 weeks at least. Overall, this market, like we have been saying, is not the easiest to trade, many of the yen pairs. So in our member area, we do not really recommend trading the yen pairs as of now because they are not reliable in terms of their structure and the way they are reacting. So at the moment for the pound yen, within the next week, we should get some sort of bounce. Then it can still reject, but overall it's going to remain in this type of range. It's going to be up and down, so we are not really interested in trading this one in specific. The EURUSD, as we have been expecting in the previous week, we expected the last 2 weeks to get a corrective structure, then a drop. We have got the drop. Now we have another corrective structure. Overall, it's a complex sideways correction right here. However, we can see entering the new month as well, within this week, we can still see a sideways move up and down like this. So perhaps it's going to be something like this or something like this before the market starts to turn to the downside, which should retest at least these lows right here. So overall, the bias in the EURUSD is to the downside, and it is trading within a cycle from the 5th of March 2024. So we are not looking for any buy setups since we have picked here. We have been saying that, and the overall bias is to the downside. For gold, we are still trading within the cycle from 14th of February 2024. We are trending to the upside. We have got this push up last week as we have been expecting after the correction. We have clearly said that the market is going to give us a small drop entering the week and then it's going to push up, which was exactly the case. It gave us about about $80 move, which was very decent. At the moment, the market has closed and it's reacting right here. It's going to remain supported overall. It can start with a choppy sideways move up and down within the week. However, it's going to remain sideways to higher. It should still go to the upside to continue higher within this cycle. So it's also possible that it could also bounce and give us another push lower and then go up, but this is not it's not highly probable. However, it's not easy to trade gold at this stage because it's going to be up and down to the upside, making sure that it's starting to give us signs that this cycle from here is start to become mature. However, should remain supported over the month of April overall. Regarding crude oil, we have been saying for a long time that the market remains sideways within this channel, is up and down. Nothing really interesting or worth it to enter a trade. It's very unreliable. However, we have been saying that the market can still retest again the upper trend line of this channel. It's a sideways cycle as of now, which it's expected to remain supported overall as of now, and eventually we can see signs of weakness within the next maybe 2-3 weeks, I would say. Of course, nobody can forecast the time. We do not personally recommend trading oil at this stage, but the overall bias on the bigger picture remains sideways to the downside. So this is what we can see in oil at this stage. In gas, natural gas, as we have been saying, the market is still remain to the downside for the bigger picture. Has found sellers again from the extension area right here. They push the market down. The market looks weak overall. The highest probability chance is to continue to the downside to reach this area right here, which is the inverse Fibonacci extension from this bounce right here. It comes exactly to the 1.236, 1.618 extension area, which should be completing a 7 swing cycle from the highs of 27th of October 2023 before the market gives us any reaction to the upside. That's the highest probability move. Of course, for our traders, we do not recommend trading gas at this point. There is no reason to risk your money in this type of cycle. It's also small possibilities if these lows do not break. We can also see a bounce like this within this week before we move down again. So either of the cases, we are not looking for any trades right here, with the highest probability to be the one to the downside first. Regarding the indices, SPX, S&P 500 cash index, we have been saying for the last week that the market should remain supported. We have been saying that we are heading towards the 5,200 plus area. The market has pushed up with the FOMC as expected. So it's going to remain kind of choppy to the upside. It's not going to be good for trading for the coming month or so. We can see small pullback perhaps entering the week, then another push up, then another type of pullback. So something like this, up and down right here, then another push up. So overall, the market is not going to be very good for a good type of trade setups with good risk to reward. So for our traders, we are not trading indices for the moment. At some point, we might see a type of bigger pullback like this, but not too big, I would say. The market still has power to continue higher, so the pullbacks will remain shallow, and we should not expect to see a bigger pullback like this. It's not going to happen at this stage. If it was going to happen, we have been mentioning about these levels right here towards the end of February. So if we didn't get the pullback from here, it tells us that the market is nesting. What it means nesting, it means it's parabolic and it's doing small pullbacks remaining supported, like a type of nests. So this is the overall picture we can see at the S&P and the rest of the indices. So overall, the cycle is extending. At some moment, we can get a sideways pullbacks. Not yet, but it could be coming something like this eventually. And is still going to remain supported for the foreseeable future overall. So we are not looking for any big sell setups or anything like that. Hope it makes sense, and trade safe if you are into the indices. And, lastly, from the ETFs, the 3Qs and the GDX we will cover again. We have been saying for the 3Qs last week, this was the arrow we have showed in the previous weekend's market forecast video. We expected from here the push to the upside or with a small pullback. It doesn't really affect it. We have been saying it should remain supported to the upside. It went exactly to the levels that we have set. So for the next week, what we can see in this market is going to be another push up, which should be followed by a small type of pullback, and then we can still remain supported overall like this. So we are not going to be looking for any sell setups. Should be a sideways to higher type of market, the 3Qs. And from the GDX, as we have been explaining, we expected this pullback and then a push up. The push up has started, so it should remain supported, and we can see the market pushing up again like this, pullback up again. So it's going to do something like this, similar to gold. So the overall bias in GDX is still to the upside. Okay. And thank you thank you guys for watching. Hopefully this video was informative and helpful and valuable for any trader. Like I said, if you are really interested in becoming a high quality trader, consider joining our membership area with the link in the description through BMC page. We have the premium and standard plans. Of course, for serious traders, we recommend the premium. You are really getting worth of your money. It's very cheap, the membership, in comparison to what we provide, and you will see eventually when we will publish our performance and results on a monthly basis. We do really look to support any trader of any level and help you become a better trader with more better and well-informed decisions in terms of risk to reward, value, ROI, and really help you understand how this market really works in a deeper level. And of course, if you like the video, please leave us a like, subscribe, make sure you have your notifications on. We normally post a video every Sunday and Wednesday. On Wednesday, we have the educational videos. If you have any questions, you can always email us at support@roiforecast.com. We have all of our contact and social links in the link in the description, including our partner and trusted broker that we recommend to any trader outside of the US for your Forex, commodities, indices, and ETFs trading, One Royal. You can consider joining. We are not affiliated, so we are not going to make money on your registration. We don't like to do that. On the opposite side, we have an agreement, and you can receive cashback, monthly cashback on your trading volume. So you can save up on your trading costs. Okay, and with that note, guys, thank you so much for watching once again, and I will see you in the next video, and enjoy the rest of your weekend. Bye bye.